weekend all. Ira Epstein of Linn Associates with your weekend wrap-up of the financial markets. And this edition is your weekend edition for Friday, the 22nd of November, 2019. And it's only about 2:50 p.m., so the settlement prices aren't going to be in, but I have to go out. I scratched my eye. Have you ever done that? So I have to go see the doctor again. That's why yesterday you had a special video up. I just had to have lotions and everything on it. To make a long story short, on the weekend edition, we're going to look at one monthly chart and then all weekly charts to get a feel in the financials as to what the markets are doing. Now, we know that China's already invited Mr. Lighthizer and Mnuchin back to China for another round of talks, could be before Thanksgiving. There's word, I use the word with quotes around it, that the U.S. is considering not putting on another round of tariffs December 15th. I don't know if that's true or not. There's word that the president does not want to sign the bill that the Senate and House have put to him about the Hong Kong protesters, but another week of demonstrations is in front. You don't know what that's going to do. But I do think the president will win points with China by almost getting to the point where Congress threatens to veto or he fights the act that he has to show that, listen, the way we operate in America, they can override me. I don't want to be overridden, do something, or understand the predicament I'm in. That wouldn't surprise me at all. When we're looking at stock indices as we're finishing the day up, most are higher today, not materially so, but nicely higher. We're looking at the dollar that's up at the expense of the euro. Now, what took place today was important because Ms. Lagarde, the new president of the European Central Bank, came out and did what I think we expected her to do. And I'm talking about a number of market technicians, people like I that go on TV and talk about it. And that is that she told the countries to make up the European Union, you've got to do something fiscal, stimulate your economies. They can't just rely on the bank for negative interest rates. Yes, you can go further negative, but you can get Germany to spend on their infrastructure. You can get other countries within it, Spain, Italy, and all this, and put people to work. It might work better than increasing pensions, minimum wages. Just get the people to work. You'll find that the money goes pretty far. That was the message I walked away with. It's not my preaching, that's what I heard. On the energy market, we're looking at a market that is confused. And the reason it's confused, it heard what Ms. Lagarde says. It's looking at OPEC coming up. Are they going to cut, not cut? At the same time, they're wondering, can anybody do anything to get the world economy going? U.S.-Chinese trade deal. It's a mixed bag. So as I look at the monthly chart, you can't argue that for the month, we've got another week left, we are up 72 points in the S&P, and that it would be an all-time high close. Now, the month's not over, but it's good to look at. And we see the bias of the market. It's over the 18-month moving average. That's strong. As we get to the weekly chart, the highest weekly close was just last week at 31.18 and a quarter. Looks to me as though as we get into the close here, we're going to be under that number for a little bit here. When we look at a weekly bar chart, you can see how the market's been running up. And one of the things that you look at on weekly charts, you haven't had a lower week since back here. And that is almost now 1, 2, 3, 4, 5, 6, 7 weeks ago from this week. That's quite a bit. If you look at how the market's stretched out, it's gone. And again, you've had these type of runs before, but got to be careful because they beg corrections every now and then. We are well over the 18-week average of closes, which is 29.91 and a half roughly. We are up against resistance at the upper Bollinger Band. And I need to remind you that if you look at the daily charts, I am assuming that the market doesn't do anything material between the time I'm through recording this and the end of the week. You've lost the daily embedded reading in a number of the stock indexes, which calls for corrections possibly as low as the 18-day average of closes. That's day. This is a weekly chart. I don't consider embedded or not embedded on weekly charts. The market's either basically got momentum up, down, or sideways. We've been up. The market's sort of flattening out right here, as you can see, but certainly not gone into a down momentum. Same in the NASDAQ. You've got the pattern higher lows, higher highs. You've been running the upper Bollinger Band, and importantly, you're not staying over it. You've been staying under it. That keeps it within the bands. That is what you want, and a sign of strength is always when you stay on that band, be it on the up band or the down band, so strength to the downside or upside. It's not just kissing it and moving all over the place. When you come to the Dow, it's the same thing. Momentum is still up. Trend is up, higher lows, higher highs, riding that upper band and backing off a little bit. The Russell, same thing. You know, if you look at the daily charts, it's a very different story. But on the weekly charts, you still can argue higher lows, higher highs, staying within a sideways band right here. The support's the 100-week average coming in at 1566.75. That's about 25 points away. And then you've got even room for down to the 18 at 1547.5. In the VIX, you're still in the bear camp, moving the market and hugging that part down. Momentum still pointing down. So on the longer term charts, yeah, you can get corrections, but it doesn't look as though there's any change of trends going on. In the bond market, you have, this actually denotes, you have the lower low, higher high. That is not a trend. How many weeks have you just been hugging this 18-week average, hitting it? You've got about 4 or 5 in a row now. Momentum, no longer down, flattening out as the market's going into this area. When you come to TLT, it's a little different. You've had lower highs, lower lows, and as we're coming into the settlement of the day, 139.89 is going to be under that 18-week average. So you still have the trend down, the bias down, momentum is going flat. And you see that in the fact that the market's not moving to the upside or downside now, it's just sort of hugging that line in the sand, that 18-week average. In the dollar index, interesting week. You have lower highs, lower lows, so that part's bearish. However, the market's at 98.17, so a settlement over the 18-week average of 97.96 means the bias is up. Bias up, swing line down, you have nothing. Momentum is trying to turn up. In looking at the chart forward looking, if this market takes out 98.30, you could end up with higher lows, then a higher high. You're putting into play the possibility of getting to 98.97 in there. Let me turn this off so that we don't have this all going with it. My wife, sorry about that. I'll get to her in a moment here. When we get to the euro, battleground, 18-week average of closes. You've got the higher lows, the higher highs, flip-flop of the dollar. Bias is down because you're underneath the 18-week average. And could you turn this trend down? Yeah. If you were to take out 110.9.5, that would turn it down. However, you're only looking for 25 points lower or so because the 109.63 levels where the support comes in. So we're really narrowing in to nothingness so far in those markets. In the Mexican peso, we had been holding support for 4 weeks or so at the 100-week average. If that gives ground, and that's the if, the next level's the 18-week average of closes. And that's what the market has done now for the past 2 weeks. It came down to it. This week got back up to it. If we look at the close or thereabouts, it's 51.43. It looks like it's going to be underneath the 100, but above the 18. What is the overall trend? It is still up. Higher lows, higher highs. I view where the market closes in relation to the 18-week average is the bias. That looks like it's going to be up as well. Is there any chance for the USMCA deal to be passed? I would rate it near zero. Ms. Pelosi can talk all she wants. She's not going to give the president a win while they're voting soon in the House to decide what to do. Are they going to do more inquiries, send it to a judicial committee? What's going to happen within there? Are they going to vote on the impeachment? And to give him a win at the same time? Canadian dollar fighting the same battle. Lower highs, lower lows. Now, the economics this week out of Canada were not pretty. To see them in a rail strike, not good. I don't know if that's going to be resolved or not, but as I read in Quebec, there was only about 4.5 days of propane supply left, and shipping by truck, first of all, a lot more expensive. What makes you think the propane's going to get there in a timely manner? The good news is so far not freezing weather, but lower highs, lower lows. I wouldn't be surprised if Mr. Trudeau has to call in and, like in America, you force the people back to work while this gets worked out. In the Japanese yen, the overall pattern is now lower, high, lower, low. For a while, we didn't have that, but now, at least with the inside week, we have that. Momentum is still down, as you can see in the slow stochastic. You'd have to get this market over 92.54.5 to negate this current pattern. That would put it neutral. You'd have to close over 93.18 to get the market into an uptrend, as I'm reading it. In Bitcoin, I did a really timely piece this week. I was asked about it, and I put it out there on Bloomberg. If you haven't seen it, you might want to go, because I've been asking this one question. I believe in blockchain. I have no faith in Bitcoin. It's a vehicle created for speculation, in my opinion. So the market's back down. Remember, this is a market that was just up recently in summertime, back up to 11,000 plus. It's back down to 67.75. And I'm going to repeat, until there's a real use where people are using this other than speculation, there's a huge difference between blockchain and a Bitcoin. And China said that today. That hurt this market at the end of the day. And for the week, you're down $1,100 an ounce. In the energies, flat would be against the 18-week average of closes. Now, your 567 differential between WTI and Brent in the favor of the Brent. As you can see, this market got a good boost this week, got up and challenged. If you look at the week's high, 64.30, the upper Bollinger Band, 64.98. So it's still very much in play there. And until this week's low is taken out, the bulls grab control. Higher lows with a higher high, momentum up, bias up. Take out this week's low and there's a big problem, because when you take out the low, at least my rule of charting, if you take out the low of an outside week up, I look for the closest moving average, and they're above the market, so that could put into play that the market's going to capture and try to drive down to the lower Bollinger Band. In the WTI crude, higher lows, higher high. The upper Bollinger Band is at 58.82. This week's high is 58.74, so for all purposes, you're up at a resistance zone in the market, but the trend is up. And again, an outside week up. I don't want to see this week's low taken out next week or the week after. Otherwise, it could pose a real problem on the chart. In gasoline, market came right back. Now, do we have the higher lows, higher close over the 18-week? We could, very easily. This week's low right here was 158.85. We then had an inside week. We came down this week to a lower low of 158.68 and came up. We do not have the pattern of higher lows, higher highs. We have a pattern of a lower low and a higher high, which is pretty neutral against the 18-week average of closes. In the heating oil, the market has not been able to get away from this 18-week average. It's just plain stuck there, and it's created sideways action in the Bollinger Band. So I see a market winding for a move. I would think with winter coming, it might be a friendly move. So you put it all together, you see where the market's going to carry. You can see how we're finishing up as I'm getting through here. We're just after about 3 o'clock, so you're going to be right into the zone where this market starts stalling a bit. I want to remind you what I do. At 6 in the morning, I am already recording my first video, but it's not for the general public. It's not on YouTube. It's nowhere unless you're a subscriber of mine. And in it, I'm trying to help you second guess yourself if you're a market technician. This is certainly not a video for those of you that are fundamental traders. People that are saying, well, I want something that I can hold on through 2020. Read Goldman's report and Morgan, see if they're right. I don't see how anybody makes a prediction in November as to how 2020 is going to go. There's so many variables, I don't see how you do it. Rather, what I think you can do is look at a market on a day-to-day basis and try to catch the medium to longer term if you can in the market. What's wrong with that? But trying to catch something and say, I'm going to buy now and just hold, I realize for value investing, that's probably a great idea. I don't think commodities fit in that realm. So what I'm trying to do during the day is I start you off, here's what I'm seeing is a trend. Here's my exit point. Exit is a word for a stop order. Stops don't mean a loss. You can stop yourself out of a market with a profit if you want. You can also get a loss out of it. And I give you profit objectives. And I update it every day. And I cover 40 futures markets along with at least 5 ETFs. The idea here to give you confidence in what you might be thinking about. I'm confident in my analysis already, so it's not for me. I'm going to cover the markets in just this sequence each and every time, and the rationale being, I know this about a 20-minute video. That's fine with me. Let me tell you what happens with the 20-minute video. You get a slide bar on the bottom. Go to the area you want. You can either watch the whole thing, or you can say, hey, I want to know about the metals. As you slide on the bottom, it's going to take you right there. In addition, like I was interrupted by my wife just moments ago, you're going to get our phone application. With the phone application, when I put out a video, you're going to get a push notification. If you buy my full research, when it comes there, you're going to get it. Now, it's more than that, because when you download the app and you hit it, just hit the message you get. It's going to open up my written ideas. It's going to open up the video if that's what you subscribe to. It's a simple way to get around. Do I do emailings? Of course I do. But I think you're going to find the combination of this, it's interesting. If you're a market technician, I don't know anything else like it. How do you get it? You can either call my brokers, they'll work with you, or you can go to our website and read about it and sign up there if you decide to, under the word research, and you'll see the different levels of research I have, or you can click up here, it'll take you right there as well. In the meantime, I'm Ira Epstein. You have yourselves a great weekend. I will see everybody come Monday. Remember, it's a shortened week because of Thanksgiving, so we'll get a lot of trading in early on. Take care.